All right, we are live. Welcome, everybody, to Private Equity CXO's latest webinar. I am honored to be back here hosting another panel for you all, so thanks for joining. Today's topic is a hot one across all of private equity, which is that we will be discussing all things regarding the go-to-market operating partner role. I think it's no longer a secret that organic revenue growth is one of the most critical value creation levers that private equity firms pull to drive returns. So to that point, there are many PE firms out there who are starting to hire, if they haven't already, an operating partner focused on go-to-market. So since this role is still relatively new across private equity, there are a lot of firms trying to figure out, one, how to hire for it, along with many executives who are wondering if this role is the right next step for them. So that is exactly why the four of us are all here today, is really just to help educate everyone on all aspects of the go-to-market operating partner role and how it really takes shape in many of the private equity firms out there. Today's event is sponsored by Centre, the revenue growth platform for private equity. We will drop their link in the chat so you can learn more about how to use their platform to optimize training and upskilling to fuel revenue growth. Drop it in the chat now. All right. We are here on Private Equity CXO, which is the world's largest digital community of private equity-backed executives. That is 35,000 accounting. My name is Joe Gravino, and I lead the go-to-market search practice at Falcon, which is a retained executive search firm that focuses exclusively on helping private equity sponsors recruit CEOs, CFOs, heads of sales and marketing at their lower middle market portfolio companies. So before I introduce the panel, there's just one housekeeping item to mention. There's a Q&A portal where you can submit your questions, and we'll prioritize getting to a couple of those throughout the session. So do not be shy in submitting those. So without further ado, super excited to introduce this panel today. We've got a panel that brings a combined 13 years of operating experience in the go-to-market operating partner seat across 6 different private equity funds. So I'll try to keep these short so that we can dive right into the agenda. So in no particular order, we've got Kevin McShane, who's back for his second time on a PE CXO webinar. Kevin is a go-to-market operating advisor for multiple portfolio companies today owned by private equity. Prior to that, he spent several years as a go-to-market operating partner at HKW Capital. And then in his past life, he's a multi-time CRO, having led successful exits with businesses backed by Bergal Sagemount, Summit Partners, the Riverside Company, Marlin Equity, and Excel KKR. So those are great logos. We're all rigorous sponsors, and he's going to be able to bring a lot of perspective from operating lower middle market tech deals. So welcome back, Kev.
Thanks, Joe.
Next up, we've got Sherry Sklar. So for several years, Sherry has been a go-to-market advisor for Edison Partners, who focuses on investing in a variety of technology businesses between 10 to 30 million in revenue. She is also the CEO and co-founder of her own go-to-market consultancy called Growth Era. Prior to that, she has done multiple tours as a sales leader and CRO. So Sherry, excited to have you. Welcome.
Thank you so much, Joe. Pleasure to be here.
And then lastly, we've got Dan Perry, who brings a unique perspective of being in the go-to-market operating partner seat for 3 different private equity funds. So first at the Riverside Company's microcap fund, where he helped stand up that function there. Then he transitioned to Parthenon Capital up in Boston before most recently joining Fort Square Capital Partners. He also brings unique perspective, really having been both an operator as well as a Salesforce effectiveness consultant at SBI and his own shop. So Dan, welcome, man. Happy to have you.
Thanks, Joseph. Always a pleasure.
Yeah, and we're gonna have a fun time here. I mean, fun fact, Kevin and Dan recently just met each other a few years ago, but they actually played high school football against each other back in the Chicago area. So
Small world.
We did, yes.
We'll leave the details for another time.
Go
Kevin was dusting off yearbooks last night. Yeah. Well, all right. Well, we'll jump in. I guess to set the stage, I want to start high level by discussing why this role has become so important in private equity. You all have operated around private equity for a long time. Help us understand what's really happened over the last 10 years and why the go-to-market operating partner role now is such in high demand. Sherry, I know you've provided a couple of slides in this, so we'll start with you, and then Kevin and Dan, you guys take from there.
Okay, great. Thanks, Joe. Okay, so I thought that it would be really important to talk about, let's just take a look back on history a little bit and what's been happening in the macroeconomic environment, how that's been impacting us. as well as what's going on in our portfolio companies. So let me share with you guys a little bit of what I just noticed in what's been going on in inflation and interest rates and the macroeconomics. You take a look at what happened with the 2008 global financial crisis, the impact of that, and where we are today after the 2020 pandemic, and look at what happened with interest rates and inflation. And you see at the very tail end there, inflation starting to rise. And in fact, an even greater look at this lately is what's going on with the CPI, interest rates, inflation hitting over 9%. That has an impact on growth. That has an impact on RPE value creation plans for our companies. And in fact, we saw growth yield per dollar spent on sales and marketing dropped nearly 50% in the last 5 years. This has an impact on what happens with private equity exit value. Private equity exit value is on track to decline to its lowest annual total in at least 5 years, despite signs of the IPO window reopening. And I want to give a shout out to my friend Zorian Rotenberg. He might be in the audience, but Zorian posted this in a LinkedIn post recently, and I thought it was brilliant. It shows over the decades the influencers of value creation in PE investments. From capital structure, it used to be that capital structure optimization was one of the most important drivers, multiples expansion. And those two were shrinking as operational improvement started to become more prominent. So value creation is important. Now, let's take a look at the state of sales. And I'm going to reference our good friends from EBSTA on this study that they did with thousands of companies. If we layer on top of our understanding of what's going on with macroeconomics, the state of sales is like abysmal today. I mean, it's like shocking to see these numbers. 20 years ago, I used to say, oh my gosh, 54% of all reps were not making quota. Here we are 20 years later, 2024, 69% of reps missing quota. And that is not even like what happened a lot with companies is they dropped their quotas. So that if reps actually had quotas from last year's rates, there would be about 80% of reps missing quota. So take a look at velocity delta. This is showing the difference between your very top performing reps and your lowest performing reps. And only 15% of all firms had 50% or more making 80% of their quota or more. So this is still not good. Look at the 44% of deals slipping. So these numbers are not helping us in our portfolio companies. On top of that, Pavilion did a study that showed that the growth rate of SaaS businesses have been cut in half in the last 5 years. Client acquisition cost has nearly doubled in the last 5 years. And NRR has significantly dropped. So what's going on here? I mean, if you're in a PE firm, how can you drive value when all of this is happening? Interest rates, cost of capital is making it more expensive to drive go-to-market. So what is the importance of the operating partner? And, it's becoming very evident, as Pavilion points out over and over again. By the way, great company that you should join if you're a go-to-market executive, because they teach you all these things. But growth at all cost is not going to work. And we've all seen that. Long gone are the days when CEOs and founders, they think the only way to grow is to add more sales reps, which is adding so much, expense to the bottom line. That's unnecessary. What's really important is profitable, efficient growth. So this is where the operating partner can come into play. There are inefficient strategies being used before. We're experts in knowing how to drive the growth levers that actually can improve growth and profitable growth. So that's why I think there has been an emergence of the importance of the operating partner. And that's why I wanted to just kick it off that way. Okay, back to you, Joe.
Well, Sherry, appreciate you putting together that deck. That sums it up in a great way. I mean, Kevin, Dan, anything else to add there?
Yeah, I'll just add, I think Sherry that was wonderful. I think that was absolutely brilliant, kind of the way you kicked this off. And I think it gives us a great macro level perspective. And then the EBSTA pavilion numbers on the KPI, the sales metrics are eye-opening. So I think that's absolutely perfect. I think the thing I'd add is Alpha, what I'm seeing, Joe, over the last 5 to 7 years, Alpha is really no longer driven solely from smart buying and creative deal structuring. It's what it requires is improving the operating performance across each investment. That's what I think Sherry's getting at. So I'd suggest there are 3, call it pressure points in private equity today. First, the average hold period per McKinsey Consulting, and Sherry touched on this, is increasing from 4.9 years to 7.1 years. The second pressure point is increased interest rates over the past few years is leading to the higher cost of capital. And that's requiring a higher generation of incremental cash flow just to reach the same IRR targets of the past. And then third and last, multiples. Multiples have decreased, which leads to the need for further expansion and be driven by the growth of top line or margin expansion. So those are the 3 kind of pressure points. And I think Sherry kind of kicked it off really well. Those are the pressure points. And that's the reason why the go-to-market operating partner has really been a big focus for these funds, Joe, over the last, 3 to 5 years. Joe,
Dan,
let me
anything else to add to that?
Absolutely. So Sherry and Kevin, great job, guys, about telling everyone we need to go to market operating partner. Now, what the heck do we do about it, right? And that's where I want to dive in is what are we doing in our portfolio companies? What am I doing? Kevin, what are you? Sherry, what are we doing to actually change this behavior so we actually get the multiples back to where they were or even exceeding? Where do we get the revenue growth to come from and EBITDA growth? How do we improve win rates? And I come down to 2 major things: efficiency and effectiveness. Efficiency is putting Joe in the right spot at the right time when we're in front of the right buying decision team to make a sale. That's efficiency. Effectiveness is what the heck comes out of Joe's mouth when he speaks to the customers. Efficiency is a lot easier to do than effectiveness. How many failed sales trainings have you been through, Kevin, Sherry, as a CRO, that didn't go anywhere, or the reps didn't adhere to it or adopt the sales training without using a stick versus a carrot, right? Efficiency is what I try to do in our portfolio companies. And we go really deep on how to be more efficient with our salespeople and our marketing people too, no doubt. And I work on that. Matter of fact, I'm at a portfolio company today, right now, doing just that, thinking how we become more efficient. Because effectiveness is really the tail end. I'm not saying it's not needed. I'm not saying there's a lost art of sales management coaching going on out there and that we need to get back to. But it's the efficiency that with most companies blow off and they just do effectiveness.
Joe, can we jump into that?
Yeah.
I love where Dan's going with this.
Yeah, let's go.
Yeah, so great points, Dan. And Kevin, loved what you just added there. But Dan's taken us into, okay, what do we do about this? Okay, what do we do about this? And I agree, efficiency, effectiveness, so important. The whole big focus that we've been learning also with Pavilion is the focus on profitable, efficient growth. That being said, let's not also step back. Another part of what we do is strategy. Another part of what we do to help companies grow is take 10 steps back and look at these companies and where they are in the market and how they can position themselves to become the leader or to become, to be able to have that, growth rate that we're all looking for. And that's why I think it's also important to take a look at, where is the company in terms of their positioning in the market, what's their moat around them in the competitive landscape, where are they making a difference in the world? And so many companies I have found, guys, are missing it in terms of, and it really kind of trickles down into the execution part of go-to-market. And that is they're missing it in terms of who is their market, who is the right ICP, who are the right buyer personas within the ICP, who are the right customer segments that they should be focusing on. How do you actually, and so much of our job also is, you can come up after doing diligence with a company, you can come up with, about 500 items that you would want them to do. How do you prioritize them? Where does it matter? Where's the rubber hit the road first? And I would say, one of the very most important things, if you don't have your ICP and your buyer personas and markets with your head on straight with that, and if not everybody is talking the same language across marketing, sales, customer success, and product, you're going to really screw up. So that's part of, I think, what we do as well. It's the strategy of it as well as the execution of it.
And Joe, just to jump in here to tie, I love kind of Dan's perspective, efficiency and effectiveness, and Sherry's coming in with the strategy. And therein lies, just the last couple of minutes, the complexity of the operating partner role. So you totally agree with Sherry, really having kind of that strategic vision. How can we grow this company from X to Y, from say 25 million to 100 or 200 million? And then Dan's point, the efficiency and the effectiveness, the fundamentals of building a go-to-market sales organization from the ground up. And then, oh, by the way, Joe, typically speaking in the operating partner role, the role is influence without the authority, because it's the CEO, his or her leadership team, the management team that's ultimately responsible for moving the needle. So I think Sherry and Dan did a great job kind of summing up the strategy, the strategic side, the operational side. You got to be good at both and ultimately do that in a very complex environment, because it's influencing without authority in most cases.
Yeah. So Kevin, I'm going to correct you there. Efficiency is about strategy. So the reason and how you influence without formal authority, probably the most key competency of the role, is you start with data. And I always go right back to customer segmentation. And I segment our customer base every which way to make sure that I'm understanding our current customers. Then I bump that against their ideal customer profile, or Sherry, a lot of times I got to create one because these companies don't have one or haven't been updated in many years, right? And I bump up against those, and we actually take a look and say, wait a minute, our customers, are they coming from our A's and B's, or are they coming from our F's, right? Or what's the propensity of that? And how do we then change that with our buying personas and buying process maps to create a value proposition that's resonating and against our competitors? Like that's a big thing that I do. Almost every single company needs that.
Totally agree, Dan. Yep.
I agree with that 1000%.
Yeah, and Kevin, to your point, I think you guys have all set the stage quite nicely. This is a very complex role, and I think it takes shape in a lot of different private equity funds based on how you want to really deploy the resource.
Now, but Joe, juggle that with 28 companies.
Exactly.
Right. There you go. Therein lies. Yeah. Dan really, therein lies why the operating partner role, honestly, Joe, is not for everybody, because the amount of complexity, kind of the influence without the authority, you bundle that together. That's why it's not a great fit for every single person.
Yeah,
And
no doubt.
the other thing I would say, guys, and excellent points, both all of you guys. The other thing I'd say is there's a fair amount of business acumen. I mean, actually a tremendous amount of business acumen that you have to have as an operating partner. And even though we're, Dan and Kevin are experts and I'm an expert in go-to-market, you have to really, as I said, take, 10 steps back and understand the business overall and understand what are the outcomes that the business overall are trying to accomplish. So I'll ask Kevin and Dan, who do you normally work with? Do you work with CEOs, you work with the go-to-market team, or both?
Both.
Well,
Matter of fact, if the CEO isn't involved, I won't work with the company.
for
Won't-
sure,
won't-
sure.
Won't
Yeah.
work. Won't work the company because, Sherry, to your point, you have to know what the evolution is of the organization, the culture of the organization. I referred to this yesterday with my managing partner, or last week, Friday. I said, is it a crawl, walk, or run? You want it to run. We're crawling right now. There's no way we're going to run. We got to walk first. So we have to go through this evolution to get to what you want to get to. And it's not going to happen overnight. Our sales cycle length's 9 months in this case. We need 9 months to get there.
Yes, and what you're talking to is you're speaking a language that the CEO needs to hear. And there's an alignment that has to happen between CEO and go-to-market. You can be, as an operating partner, by the way, you can be the best friend that the go-to-market teams will ever have, because like you're translating how the CEO, you're basically helping bridge the communication, building alignment. At the same time, you're educating the CEO, helping the CEO see what needs to happen and go to market. Not every CEO is an expert in go to market, and that's where they could lean on you. And I'm just saying, it's important to take a look at outcomes. What are the business metrics that the company is going to measure itself by the end of the year or the end of 2 or 3 years? And, again, even taking the long view of what are we looking for the valuation to be at exit, you know, that's how we have to keep everybody focused on that kind of, keeping everybody in the same train. And that's how you can help them make better decisions.
Sherry, it's such a good question. Just to kind of double click on it for a second. So your experience, Sherry, you were an operator, you were running companies, and Dan, same thing. He ran companies as a C-level executive CRO, and it's that trust. So I was a CRO a couple of times for Bergal Sagemount Company, Riverside Company, Vista, all the usual suspects. And I got to see the operating partner model and the CEO. And if that operator really didn't build trust with the CEO and his or her leadership team, Sherry, to your point, and I think this is kind of what you're tapping on, it's not a great relationship because there's kind of misalignment. So Dan, I know you do this really well. Sherry, I know you do this, but the top operators, Joe, really build that trust, with that CEO, the leadership team. And what good operators do is pattern recognition, because, based on their experience, what worked, what didn't work, they're able to use pattern recognition to their advantage. And back to Sherry's point, there are 3 big constituencies that we work with day in and day out. First is the investors, the board. 2, the founder, CEO, to Sherry's point. And 3rd is our fellow operators on the operations team. Dan was touching on that. But all 3 are super important constituencies to have trust, have that credibility, and know at the end of the day, we're all on the same team, same goals, same objectives, and same mission.
So, Kevin, you mentioned pattern recognition. People ask me all the time, Dan, what's your superpower? What do you do really well? And I don't, is my go to market really well? Maybe, yeah. Is my ability to sell things? Yeah. My superpower is pattern recognition based on all the experience that I have, right? And I know in our roles with that many companies, we call it in consulting fast framing. We have to fast frame pretty quickly the situation.
Right.
And I know based on pattern recognition, what works and what doesn't work, kind of irregardless of the industry. Of course, I go to the CEO, Sherry, and I say, "Oh, your baby's very, very special. We love the baby. We think it's great. It's a unicorn. I got it, right? But we all know that we've seen this before. We know what works and what doesn't work. It's how do you get it from, in my example, crawl to run."
Great point, Dan.
Hey,
I
Dan.
agree. Oh, go ahead, Joe.
No, Sherry, finish it off. Go for it.
It's also, to both of your points, Kevin and Dan, it's also a balancing act. You pointed out the different constituencies that, the operating partner really has to work well with the investment partners, the managing, the people on the board, the CEO and the go-to-market teams. It's a balancing act too. And the trust that you guys are bringing out, the trust that you have to develop with all those parties is really essential. And sometimes it can be a little, dicey because, you have a relationship that you're building. Look, we're all relationship builders, relationship people. That's how you gain trust. And you build a relationship with each one of those individuals, and you want to do your best for everybody. So there's some people that might say to you that, well, you just know they don't want you to talk to the other constituent about what they just told you. You got to keep it inside and synthesize it and use it, and then add value to the other constituency in a way that does not betray the trust on the other side. So there's a little bit of a balancing act that goes on when you handle all those constituencies.
Yeah. What makes it easier, Sherry, and I tell this to my managing partners, is the operating partner has to get their butt into the location they're at and go face to face. That's how you build trust. I'm here today at one of our portfolio companies, like I mentioned. Sure enough, guess what I'm doing? Pulling the CEO into a meeting, pulling the CFO into a meeting because they're available and I'm here, so they make time for me. And all of a sudden, I'm building trust with them that now my crazy idea doesn't seem so crazy because they actually will be more efficient and effective.
And it's great that you're there. You're taking the effort, making the effort. You're there. You're speaking to them eyeball to eyeball. That's really cool. I like doing that too. It was hard to do during COVID, I think. But
And so, Joe, this is now just to kind of take us a step forward in the conversation. So, we were all at PEI in New York, the PEI Operating Partner Forum in New York, which was a great event. A couple hundred operating partners. Now, here's where it got really interesting. So, there's a kind of debate going on. Sherry, I'd love to kind of hear your perspective, but a debate around the operating partner being accountable, holding ourselves accountable to the financial goals. And there was a good debate in New York because, from my perspective, if you can't quantify the value that you're driving for your portcos, you may be out of step with the investment team, and that's not where you want to be. And so the idea there is influence without the authority. Be responsible. I know Dan does a good job of this. He really quantifies how he's moving the needle. But at the end of the day, now here's the trick, Joe. At the end of the day, the credit goes to the CEO and the management team, the full credit. And we're in the background, in the board meeting, maybe not even at the big table, but around, and all the credit goes to the management team. And therein lies, I think, the dichotomy of the operating partner role, holding ourselves accountable to moving the needle, aligned against financial performance, but yet all the credit, and it goes where it belongs, which is the management teams in the portfolio.
Yeah, you win when your portfolio company wins. And we're all aligned that way. I mean, and that might go, when we talk about compensation later, but we're all aligned. We want them to win. I don't really need the credit. I want to see them win. Are they going to increase their ARR, their growth? They're going to increase their profitability. They're going to improve all the metrics that we're looking for them to do. That's the end of the day, what matters, and where our value comes into play, and how can we increase enterprise value for that company. I mean, we took a look at, from the point of engagement, we actually doubled in enterprise value within a year. So, you can start to measure the impact that you have, but you can also look at just plain old metrics. Did one of the portfolio companies, they might have only sold like one logo last year, but most of their sales came from renewals. Right. Well, we want to change that. So this year we got 16 new logos. That's an impact. That's huge. 16 new logos from a year ago where they were only getting one. And it was a big, long sales cycle, 6 to 9 month sales cycle. So, when you can show numbers like that, you're adding value.
So Sherry, you're exactly right. And I try to do that a lot.
Yeah.
But I'm new at Court Square. 13th week, maybe 14th week. Who's counting, right? But 13th, 14th week, right?
Congratulations.
Yeah,
Good.
yeah, I made it this far, right? And so I'm presenting to our 7 managing partners, talking about, what is value for someone like me or other operating partners. And we can go by evaluation. Jerry, you mentioned new logo increase, improvement, better said, sales rep margin or quota improvement, all of those metrics. You know what they said to me? They said,
Prove it.
your value is if the CEO likes you and says good things about you. If that happens, that doesn't mean that you're likable, you're a friend. It means that you're helping him move his business forward, then you're successful. So I thought it's so ironic that a PE firm with such financial detail through all of the diligence and through the hold period and the exit strategy relies on hearsay for their operating partners if they're performing or not. So I think it's a blend of both, right? And that we have to
I love that.
master.
I love that. Actually, I love that a PE firm would say that to you. That's really cool. Because we do have to add value to that CEO. We want to make that CEO successful any which way we can. So if they're feeling positive about you, then that means they must feel like they're getting a lot out of that relationship.
So I couldn't agree more. And Joe, it gets back to, you and I have talked about this, the operating partner role, because kind of what Dan's hinting at, and there's different models across there's different funds. We all know that, but you have to have a low ego. You have to be a low ego, and be humble. And again, it gets back to being able to kind of put those wins, losses, and lessons in front of the CEO. And the way I build trust is walking the CEO through kind of where I screwed up, where we came up short, on one of the portfolio companies. And if you do it that way, it just brings down the volume, brings down kind of how people sometimes put up some guardrails. It brings it down because I can go and share where, as a CRO or an operating partner, we didn't get it right. And, maybe it's entering a new market. Maybe it's product expansion, margin, whatever the topic is, but sharing with that CEO and the management team where we came up short and the lessons learned from that. And if you have that kind of humility, I think that's a really big catalyst early on, especially, what Dan's describing. He's kind of early on trying to figure out these relationships with 28 CEOs. But showing that genuine humility is a great way to start to build that trust. And now we could start to work on, to Sherry's point, Sherry, what are some of the underperforming, metrics that we want to focus on? She talked about sales cycle. She talked about quota attainment. She talked about deal size, all the right metrics. Now we can focus on some metrics that we want to start to impact for the next sprint.
Yeah.
Meeting.
Kevin, your point being, if you want to be an operating partner, check your ego at the door.
100%. And that's why, Joe, I know there's a lot of interest from former C-level executives about this role, but that's the real first kind of pressure test with candidates, because it's exactly what Dan and Sherry are saying. You got to check your ego. You got to be humble, because the credit ultimately, and it's where it belongs, is with the management team. It's with that CEO, his or her team. And I know operators like Dan and Sherry are they're very, they're celebrating that success, and they're celebrating that joy of looking at that team from board meeting to board meeting, really making improvement and going against that hold period, because ultimately this business is about returning capital to the LPs. That's it. That's what this business is about.
So Kevin, I really love the point that you just brought up, and Dan, like, really talking through the humility and checking your ego at the door. At the same time, I think we wouldn't be where we are if we weren't team players. I mean, we have a certain personality that makes us want to root for everybody else. And yes, we're go-getters. We wouldn't be in the position we're in right now if we did not succeed very well as
Sherry,
CROs.
I couldn't have done this job 15 years ago because my
Right.
ego was too big for it.
But it wasn't just the ego, Dan. The other thing is that, and what I thought Kevin brought out, which was brilliant, which is, you know, you talk about mistakes made. We've all been around the block. So we have experienced failures and failures and failures and wins and wins and wins. We've had both. We've seen it all. I mean, I think that's one of the biggest things that we can bring to the table as operating partners is you have multiple failures, you have multiple successes, and you know the stories, you know what works and you know what doesn't work, and you can guide your portfolio company the right way pretty quickly. You can get right to the point faster than most other folks.
That is pattern recognition at its
There you
best,
go.
right there.
And then, Joe, if you don't mind, what I've learned from Dan over the years, and maybe Dan, if you don't mind, just talking a little bit about this. Dan, I think because I think Joe at some point is going to talk about the different operating partner models, the center of excellence, the specialist, the generalist. Dan, you do a great job working with those generalists on your team, kind of getting them rallied around a specific project and using leveraging kind of all of what they do. You want to just touch on how you work with other operational members of the team and how you move the needle that way in the portfolio?
Yeah. So you start with discovery. What do they want to get out of move the needle on this operating portfolio company? Better said, what is their operating partner goal for that portfolio company? We have a tech partner at Court Square. She's great. I asked her a question. So what are you trying to accomplish in XYZ company? I want to know what she's trying to accomplish, because if I can help her get there faster, better, sooner, then she'll want to work with me to do that. So Kev, I go back to the old sales skills, like, the old Stephen Covey, seek to understand before being understood, right? That's what I'm trying to do all the time, because then I can actually be aligned with the operating partners, the generalists, what they're trying to accomplish, what evaluation they want, how much money they want to put in their pocket, if that's the case. And I help them try to get that done. And then they help me in return, right? People return in kind. And that's what I try to do all the time with the generalist operating partners, the CEOs, and quite frankly, my peers that are that are not generalists, but they might be technology-based or finance-based.
Right.
And Dan, one of the questions I have, and I think there's a lot of people that are in the audience today that are also wondering this too, is when you're hired into this role, and we all know some private equity is when you do a great job, you get pulled into a lot of situations. That's your reward. When you get hired by a private equity firm into this role, how does that manifest itself in terms of the number of portfolio companies you operate? Are you going surface level? Are you diving into the top three most, the hottest situations across the portfolio? What does this look like for, Dan, you've seen it in 3 models, Kevin and Shane or Sherry, you guys have seen it a couple of times over. So just help us all figure that out.
Sherry,
So I've seen it a lot. Yeah, Sherry, you've seen it a lot too. Go ahead, Sherry.
I was focused on maybe 2 or 3 or 4 at a time. That's about all I could, I think that, the way we organized it, we have what's called the Edison Edge team, and there were specialists in different disciplines. So we had somebody who was really, ex-chief people, everyone was ex-CEO or ex-C-suite something. A person who's chief people officer, head of leadership and governance type issues, somebody who's in charge of product and technology, somebody who's in charge of finance, and then there were like 3 of us in go to market because there was so much emphasis on go to market. And so, yeah, I mean, it was important to divvy it up across the portfolio between all of us, depending on what all the issues were. So we would split it up across the portfolio, say 3, 4 companies at a time.
Dan?
So I've worked in push models and pull models amongst the 3. And they're very different, right? As you can imagine, or if you were in that model, and how you work across them is extremely different. In a pull model, which most PE firms are pull, not a push. There's some out there that are pushing, most are pull. It is based upon where you can spend time an inch wide and a mile deep. So that is probably time constraints, 3 to 5 projects, like you said, Sherry.
Right.
So what I've done is I'd set up our guidance to our portfolio companies as either advisory or a project. Advisory means I'll talk to anybody, anytime for any advice. I'm on the phone tomorrow reviewing commission plans for 2025 with the CEO and CFO and Chief Growth Officer of one of our portfolio companies. That's all I'll do. I'll review their plans. They send it to me at a time. I'll take a look at them and I'll get on the phone for an hour and I'll advise them on what to do. And if I see it's really flawed, then I might make a recommendation for a consultancy to help them out that specializes in sales compensation. But I'm going really deep only on 3 to 5 companies because that's all I can do. Because if I don't do that, then I don't give them the quality time they need to really transform their organization.
Love it. And Joe, I'll add this. It's as Dan knows, Sherry, it really depends on the AUM. I think that's kind of what Dan's getting at. It really depends on the evolution of the operating team. There's some that are 5 billion to 10 billion, and they have, specialists. These are Dan's and Sherry's, former CROs, former CFOs. But then they have a layer underneath that are what I'd call generalists, super smart. They're doing kind of what Dan's talking about, kind of project oriented. But now here's the kicker, though, Joe. What I'd throw into the conversation. One, and I know both Sherry and Dan do a great job of this, is really I think the most important thing that we can do as operating partners is the hiring, the developing, the coaching, the mentoring of that leadership team. If we can help people along their career journey and transforming them from managers to leaders, that's the force multiplier that Dan's talking about. If you have 28 portfolio companies that you're responsible for, Dan just said, and I agree with them, you could probably only do 3 to 6, depending on, the circumstance. But where you want to go all in is that talent, developing that talent. And that's at the CEO level, the CRO, VP sales, VP marketing, VP customer success, managers. If we, as an operating partner, if I can help people from the BDR role to the AE role, and the AE role to the director role, and getting that director promoted to VP sales of a PE-backed company that's high growth, we don't even have to use outside people. We just develop that layer of leadership, make them better. And then ultimately, then you can step away because the DNA is in place. You got the right leadership team in place, and they're making all the difference against the KPIs that really matter.
Kev, you'll love this. So you taught me this. It's like you're really good at this, right? So I took your advice when I first met you 2 years ago, roughly, right? And I started to develop some leaders. One of my leaders, my old PE firm, just got promoted to CRO from really a sales leader, not even VP of sales. Now he's a chief revenue officer. And he texts me, "Thanks, Dan, for all your guidance and help." And I'm like, "Kevin McShane, thank you, buddy. You taught me what to do, man."
Well, the truth is, I've had a lot of great mentors in my life, coaches, teachers, and bosses, managers, and helped me kind of get back on track. And and Sherry, I know you have your own examples but when that VP of sales, and I have one in a dear friend of mine, a Houston-based company, and he called me one day and he said, "Hey, man, I just got promoted from director to VP sales." And that is absolutely, Joe, the very best part of the job, other than getting, now that team, frankly, with all the foundation we put in place, they're against their hold period. They're gonna accomplish their hold period. It's gonna be a great exit. And taking a step back, what did we do? What did we focus on? It's really developing, coaching, and mentoring that leadership team. Sherry, I think you were going to jump in.
Yeah, I'm so excited about this topic. I think that people are everything. The quality of people is what's going to make or break your company. And so you're absolutely right to focus on it. We focus on hiring and developing world-class performers. So, I spent a lot of time helping CEOs and heads of the go-to-market area hire the very best. Could be the very best CMO or the very best CRO. The other thing that we do is we coach who's there. So we've all been ex-CROs. We're coaching the CROs. We're coaching the VPs of sales. We're helping them be the best they can be. But it does permeate down, like you said, down to the IC level. A lot of times, I'd be in the company and I would be interacting and talking to even the sales reps and even the, project managers on the professional services side or the CSMs. And they have all been elevated in some degree based on certain things that we've said to them. So I think we do have an impact beyond what we think we do.
Well put, Sherry.
So Joe, if you're an operating partner and haven't been a CRO or CMO, right? You haven't done that, then what do you do? Right? Because all three of us have done that job. So if you are in that position, and I know people that have never done that before, how do you actually compensate for that?
Yeah, look,
Because
there's different models out there, to your point, Dan, in terms of private equity governance, in terms of, pull models, push models, and really it comes down to what you want this person to do. Now, I've seen consultants who have consulted their entire career get hired into this role. And if you really break down what they're doing, they're building a playbook, which is obviously what they built as a sales consultant. And they are deploying that across an entire portfolio to say, hey, here's the playbook, here's some best practices around go-to-market. Mr. and Mrs. CRO, use them if you want to, because we're a pull model. Whereas you guys and anyone who has a multi-time CRO background are going to go inch wide, mile deep, Dan, to your point, and go deep into the operations, talk to the team, talk to all the layers, get to the front lines, and really start to help on the execution side of things, as opposed to come in with the playbook and the deck to say, oh, you could follow this if you want to, but it's on you to execute. That's the difference that I see.
Yeah, I love that. I think it's important. Dan, I don't know, you guys have lived the roles also. I just can't imagine being in the role without having that kind of operating expertise. I just can't imagine being, you talk about trust. How do you develop trust? You have to have those stories. You have to know what it's like to be in their seat. So yes, I think consultants can add a lot of value. Maybe you have them on the team. They can help you execute RevOps and tech stack and whatever else you need. But, when it comes to management decisions, I just feel like it's so important to have that kind of operating expertise. We've all sat in that role before.
Yeah, and to butt in here, just we have 12 minutes left, and I've gotten this question about 15 different times in the chat. How do you guys get one of these roles? Obviously, they're not typically on job boards and things of that nature, like some CRO and CEO roles are. In your experiences, just walk us through how you guys got to where you are and really how you achieved the role. There was networking with private equity firms, targeting PE investors, targeting operating partners. What do you do?
Well, you know what? I'll just jump in real quick. I was very fortunate. I worked in a company where I was a CRO, and Edison was an investor. Vista was an investor. Well, we had brought in Vista. And, we did really well. And a couple years later, I get a phone call and it's like, Sherry, we're trying to figure out a way to get you over here. Were you interested? And I'm like, what is an operating partner? I didn't even know what it was back then. But that was how it happened. And I've talked to a lot of my peers, and it seems that it happened for them that way also, where you are already in a PE-backed company, and you are in a position of, you're a CMO, a CRO, or whatever you are, chief people officer, it doesn't matter which function. And the PE firms notice you. They know, and I would say get noticed if you, not only just perform and do well, but, try to get to know the people who are your investors. Try to build a relationship and help them understand where you're coming from, what you're trying to accomplish. That might also help. Over to you guys.
Yeah, I can jump in. Sherry, to the entire audience, Joe, Sherry's spot on. Private equity is kind of a small kind of community. And I think reputation is everything. And my own journey into the role is exactly what Sherry was describing. You know, I worked for a Bregal Sagemount portfolio company, and we got to a great exit. We sold the business to Marlin Equities, great exit. Everybody celebrated. And then a year later, one of the investors called me up and he said, "Hey man, I'm moving to this new fund. I need an operating partner." And I think, I said, "Let me get back to you," is exactly what I said, because I got to see operating partners from all of what the blue bloods, Joe, that you've described earlier. And I got to see what I liked and what I didn't like. And I thought about it, and I'm so glad I did step in. But the language of private equity is exactly what Sherry's talking about, is results, outcomes. And I think whether you're a consultant getting into the role or you're an operator, you have to have that track record of moving the needle, getting companies to successful, because that's the currency of private equity. Dan, do you want to add something?
Yes. I spent my entire life to get this job. And what I mean by that is I was a sales rep, then a sales manager, then a global guy, and then I was a director, and then I was a VP, and then I was a CRO, and then I was a sales consultant. And what happened is I was really consulting for private equity companies, portfolio companies, many PE firms over many years as a sales consultant. And I got a call from a guy like Joe one day and said, "Hey, you were recognized by numerous PE firms because of the work that you did inside those companies and your track record of what you've done in the past. This is a great, you're interested in this job." 28 interviews later, because they tend to be very thorough, I got the position, right? And that was the first one at Riverside. I got the job because of all the experience that I've had. And I perform well on the job, knock on wood. I perform well on the job because of all the experience that I've had. So those individuals who want a job like this, but don't have that experience, my advice to you is go get the experience. You gotta go be a head of sales, or you gotta go be a sales consultant, and preferably both. And when you do that, then you'll be able to get a role like this, if that's what you want, right? A role like this, and that's where you can actually have a lot of fun.
Main takeaway: put points on the board for private equity for extended periods of time. Get noticed. Use that to leverage yourself into one of these roles.
And Joe, there's probably
and one more.
No, go ahead, Sherry. Sorry. Yeah.
Oh, sorry. One more thing, just to add to your point, Dan, is try to build leadership experience that is not pinpointed in just one functional area. Try to be broad enough where you're seen as a business executive that can play at the board level. And so you understand you can play in any of the roles in go-to-market, say, marketing, sales, customer success, product, and you hold respect across the entire organization. If you can put yourself in that position where you're broad and can show leadership across all the functions, you're going to stand out.
Without a doubt. And consulting does that for you as well, not just being in an industry, but consulting does that as well for you too. So it's super, super important.
Yeah, it's a great point, Sherry, especially if you're going to try to go into a portfolio company and empathize and try to say, "I've sat in your shoes before," and empathize with the CEO, CRO, operating partner. You have to understand what their pain points are and what they care about. And the best way you're able to do that is having that cross-functional experience. So I agree. And I know we got 6 minutes left here. There's a lot of different compensation models out there: 1099 versus W-2 versus having equity in the individual portfolio companies versus carry in the fund. What have you guys seen out there? In your opinions, what do you think is the most effective model to really drive value?
Sorry, I've seen them all. I was a 1099 with stock options, right, in companies. I was a W-2 with carry as well too. I was a one PE firm was a W-2 with carry, but you only got paid the carry when the fund closed, not by exit, right? Which means 25 years before you get paid, right? So I've seen it all. The best one, in my opinion, is your W-2 with carry in the fund. buy exit?
Yeah, also had, I was 1099 and carry. And we were part-time, at least my role was part-time, not full-time. And I liked it because I got a chance to do my other stuff. I have a consulting firm. I'm just starting a brand new fund, by the way. I want to mention that's at the intersection of disruptive tech and social impact. I'm very excited about this. And we'll be hiring operating partners down the road. So I'll be looking for people. But I wouldn't have a chance to do all that if I couldn't do it part-time with Edison. So I liked it.
Yeah, I love that, Sherry, and Dan brings great perspective, kind of macro level perspective. So it really depends, Joe. Like, I'm the 1099, I've been 1099. Sherry's describing like why that could be a good fit for some people. But then, Dan, and I know Dan would share this, at other points in your career, you want to be in the team. You want to be, a lot of operators, it's important to be on the IC to kind of, and that's where I'm hearing from a lot of investors that they want an operator that, that's on the IC, that's helping them kind of make go, no go decisions. And you got to be inside the team. So it kind of depends, Joe, where you're at, kind of what's interesting. But ultimately, at least for me, being inside the fund, really being a part of the organization and being held responsible and accountable to the financial goals across the portfolio.
Yep, that makes sense. Yeah, like I said too, I've seen both. Yeah, I think in the 1099 models, Sherry, I know you were part-time. There are some private equity firms that do employ 1099 models because the management fees that they have just aren't enough to have an entire operating team. So they'll structure everyone as 1099, but they'll still give them equity or a slice of carry in a certain way to keep things incentivized there. So, and then there's obviously 1099 rules like you had, Sherry, where it's part-time and the PE firm is still figuring out, do we actually want to dedicate full-time resources to this? Yes or no? We're going to try this out 1099 for a little while and then go from there. So,
and it gets back, and I learned this from Dan. So it gets back to, for any candidate that's having conversations with private equity, ask about their average hold periods. Ask about how many exits the last 12 to 24 months. Ask about the multiples, because you'll kind of get a good sense, for me at least, where I can be helpful. I want to run to the fire. I want, where I can come in and really kind of make a difference. But those are the right questions to be asking when you're sitting in front of an investor or an operations team, and you're interested in joining a potential team.
Yep, no doubt. If private equity firms are able to continue to raise capital and deploy it and buy companies for you guys to do work, that is a private equity firm you want to hitch your wagons to.
Right. And that's where, and I know we're coming up on time, but that's where I think, going back to where we started, right? The high cost of capital, the longer hold periods, all of the KPIs that Sherry did a great job outlining. Those are the reasons why you want to be an operator in today's climate. I want to be in front of an investment team talking about shrinking that hold period, getting higher multiples. I want to be talking part of the team that's helping to accomplish that. Because at the end of the day, this business is about returning capital to LPs.
Exactly. One other key point, I know we're at the end here, Joe. There is an opportunity sometimes to be hired outside of the operating partner role if the portfolio company needs it. So sometimes there may be a vacuum of leadership. They don't have a CFO or they don't have a VP of sales or whatever, and they need somebody to come in and help drive that. You could go in short term, you could be fractional. You could be a go-to-market strategic advisor that's above and beyond all the work you would do as an operating partner and get paid separately directly by the portfolio company. That's another model that could happen.
Yep, no doubt. I've seen that model a few times, especially the interim CRO model or CMO model where you just do that time and time again. So it takes shape in a couple of different ways. But Sherry, to your point, we are at time. First and foremost, want to thank the three of you. You guys have been great. This was an awesome conversation. I personally learned a lot. Hopefully you guys got a lot of learnings out of it as well, and same with the audience. Thank you guys for joining. Thank you again to Century for sponsoring, and this recording will be available on privateequitycxo.com, so check that out there.
Thanks, Joe.
Thank you guys.
Thanks a lot, Joe. Thanks everybody. Kevin, Dan.
Bye-bye.
See you guys.